So good morning once again, everyone, and thank you, everyone, for being here. I really appreciate it. It looks like we don't have that many people coming over to attend. I don't know what the deal is here, but we're going to, for those of you who are here, I'm going to do my best job for you here to talk about continuation patterns. Las Cruces, 51 degrees. That's awful cold for you guys, isn't it, Tammy? Or Tommy? Yeah. Hey, hi, how you doing, Carol? Awesome. So today we're going to be talking about continuation patterns, and for those of you that know about what I do, continuation patterns are extremely important to me, and it's the way I trade most of the time. And it's just continuation of a trend is all it really is. And there are some price action patterns that help you identify that continuation trade. And, you know, one of my favorite things, one of the things that was a kind of a big aha moment and a revelation to me years and years ago when I was just stinking up the market is just find a trend and then wait for the next entry. And that wait for the next entry is just nothing more than waiting for that continuation pattern in a chart to, you know, get that opportunity to get in. So for example, this morning, I picked up a position here in Altria in Mo. And you can see this is just one of those charts that's coming up. This is the first little opportunity in here where we've kind of rested and set in there on this trend. We're breaking above our 50-day moving average in here. And so again, it's find a stock that's either beginning a trend or already in a trend. So here we go. There's that higher low right there. Same trade. And that's the thing that you guys are going to find with me. It's pretty much always the same trade. Price pattern's a little bit different, setup's a little bit different, ticker's a little bit different, price is a little bit different. But it's pretty much always the same trade. And I repeat it over and over and over. I just closed a trade today on TIGR, and there's that pattern right here. Close that out for a nice profit today. And just doing the same kind of things over and over and over in the market. And when we look for those continuation patterns, there is a big difference when it comes to the steepness of the trend. You know, let me just go over here for a second and give you an example. How many of you would agree that when you see trends that are like this, would you guess in here that the price action stability in a trend that looks like that is going to be way better than in a trend that looks like that? Would you agree? Price action stability is going to be easier to read here. There'll be more consistency in the price action as a general rule. Okay, more price action consistency in here in a trend like this. So amplitude of a trend does make a difference. And, you know, particularly when you see a stock price that's been moving along in a trend like this and it goes like that, well, be careful on that next pullback, because this happens a lot anymore. Pulls back, it pops a buy signal in there, everybody jumps in, and then it does this. Comes back to trend. That's very common in the market, and it doesn't matter if it's an uptrend or a downtrend. So amplitude of the trend does make a difference. So you can see a big shot like that move here in TIGR, and what do? we end up coming back. We end up deciding this is going to be the trend about right in here. This is where the downtrend breaks and we start moving back up. Okay, so be careful chasing over extended moves to the upside. But when we find those charts, and I'm going to go to something that Mickey D's is a really good example. It's done this multiple times, where we finish a sell-off here, and right now I'm just talking about the bullish patterns. We finish a sell-off, we make the first higher low. Can you guys see how similar that is to what I just pointed out in Mo? We make the first higher low, and then it doesn't matter if you get in here. Notice that this one right in here can sometimes have more risk to the stop. But as the stock progresses, notice the risk to the stop decreases often. The longer we're in a trend, the more stable the trend becomes. And that continuation pattern just continues to repeat itself over and over and over in the chart. Okay? There's another example right here. This one right here, this first higher low, you can see how volatile this was in the move, not very stable. And it tightens up here. It gets even tighter here. It's even tighter here. Those are continuation patterns, and they're repeatable. They do the same thing over and over and over in all markets, in all stocks. It doesn't matter if you're trading currency. It doesn't matter if you're trading futures. It doesn't matter if you're trading stocks. It doesn't matter if you're trading bonds. It's the same. Continuation patterns are the lifeblood for my account. And it even works really, really well in longer term trades. Okay. I nibbled some AT&T here. I bought more here. This is a weekly chart. I'm up huge on this trade. Big dollars, big dollars. By just following that continuation pattern to the upside. And it doesn't matter if you do it on the weekly. You could do it on the daily. Continuation pattern, follow those higher lows, follow that trend. Now, the trick to doing this is the first step, identifying a stock that's in a trend. And there's some easy ways that we do that. Of course, with me, you know, I teach that 3-8 trap. You don't actually need the 3-8 trap to find them, but the 3-8 trap helps you see them. Okay? When you cross up out of a bottom, cross up right over here. Come on, give me my, there it is. Cross up here, we wait for the higher low. And that begins this potential upside trend. If it's not strong enough where the 3 can't hold above the 8, don't trade it. Okay? Because your odds are going to be less of winning that trade. If you want a high odds of winning trades, just wait for the stock to pull back to rest, come back and find trend in here, whether it's the beginning of a trend or a continuation in a trend like this one right here. Okay? It's easy to identify, it's easy to see. Okay? And you can repeat those patterns as long as the stock trends. Okay? It doesn't require you to be any kind of genius. Just find a trend. Find any chart that's trending. And then wait for the next entry into the trade. And you never know how long a chart is going to go. If you're swing trading it, follow your swing trading rules. Not that difficult to see these patterns as they set up and make that decision whether you want to enter. Let me go here to a naked chart on this. Okay, Adobe, this was this whole line here was an alert. And you can see I've alerted it again. It's coming back here into trend and has the potential to just continue. I have no idea how long it will continue. One of the members brought this to me to the room the other day. I placed a price alert on this. This is a weekly rounded bottom breakout. It's the same pattern, just on a longer term. And I'm looking for the upside potential in trades like that. And those continuation patterns, if you start looking for them and identifying them, they really are everywhere in the market. And it's not hard to see them if you look at the whole chart, if you look at the trend first. And I think the trick to this is always be looking for support, resistance, and trend. The very basic building blocks of anything in any chart: support, resistance, and trend. So when you can find those stocks that are reversing, take for example, I've been bringing up like Mondelez here recently, breaking the downtrend, stretching through to the upside. If you take a look at the 3-8 trap, we've had really no rest yet. But believe me, it will eventually rest. And it will likely set up an opportunity. If the trend is going to continue, it will set up an opportunity. Now, if we go into a bearish market, obviously today is a pretty rough day. For those of you in HRC that while Rick was gone there for a while, and you guys saw me put on some bearish trades on the indexes, I closed half of the QQQ trade today for 69%. I'm holding the rest of it. I closed half of the SPY trade today for 40%. The QQQ trade has more than an 80% probability of expiring worthless at this point. So I'll probably hold that because I think there's a real good chance I'll get 100% out of the remainder of that trade. But it doesn't matter what strategy you use to trade these patterns. The pattern is the same. Just pick your strategy. So in a down move, okay, the continuation patterns are the same. 3 crosses down through the 8. We break that trendinator in here. We consolidate over. This begins a downtrend. Right here, that failure. And every pattern after that that continues along that downtrend is another opportunity to short the same stock. You can do it over and over and over in a down move. You can do it over and over and over in an up move. Now, a lot of people, the struggle that a lot of people have in a move like this is, well, I just want to be in it now. Okay? Now, there's a way you can resolve that, but first off, we have to make the decision in our trading. Are we going to follow discipline of a strategy or are we not? Okay, I follow discipline of a strategy. It's one of the reasons my win-loss ratio remains so high, is because I've learned over time that when I do what I want to do, just because I can't wait, I just want to hurry up and buy this, well, my win-loss ratio suffers as a result. But if I'm patient and just wait for the pattern, the continuation pattern to show up, I may not make as many trades, but the quality of my trades are better. And I make more money. I don't have the drawdowns that a lot of folks experience because I'm just so stringent to my rules. So you have to make that decision. But a way around that, and I've been trying to teach this to folks for some time now, is if you just can't stand it, I got to buy this, buy 1 share. Buy 10 shares. Whatever it is. Don't get carried away. Just buy a few shares. And then wait for the next entry. See, one of the problems that we have, we think that when we see it the first time, we may never see it again or we won't see it in time. But if you buy a share too and put it in a portfolio, you're going to be watching it and then just wait for the next entry into the trade. And just because you have one share of stock or 10 shares of stock or whatever it is, doesn't stop you from buying call options or put options on that trade. And I do an awful lot of that when I'm starting a trade. If I just decide I have to do something here, I just nibble a little tiny bit. I've done that in Boeing here. And Boeing could be in a potential setup range. We're getting pretty heavy pullback here today. But here's the cool thing too, with a very small position like that, if you're wrong, it doesn't hurt you. Yeah, you're going to lose a little tiny bit of money, but it doesn't hurt you like it will with all the leverage. So start with something. You can see we've got a trend going here. I don't know if it'll be able to break that resistance up here, but I know if this does pop and reverse and set back up, I may want to be in that trade, and I may buy some calls on that trade now, just following that trend to the upside. And it's not a big effort. And that's the cool thing about this, guys. You don't have to stress over following a trend. You really don't. It doesn't, you don't have to be anybody special to follow a trend. Stocks trend because institutions are supporting the stock. That's all there is to it. You can disagree with that all you want, but 80+% of all the money in the market is held by the institutions. They will decide if the stock's going to trend. Okay? So that's not for me to decide. I don't need to pick bottoms. I don't need to pick tops. I need to let the institution show me where they want to go, and then I tag along. It's easier to do. It makes more money. Now, quality of setup is really important in this strategy as well. The quality is extremely important to look at that chart and know what trade is your trade. So, for example, we know Warren Buffett is pretty much in cash a lot of places, but one of his darlings right now is Occidental. He's continuing to buy Occidental. The reason he's doing that is this is one stock that he sees value in. He doesn't see value in most of the market right now. That's why he's mostly in cash. And he's actually in treasuries. But he doesn't see much value in a lot of the market. So he's backed out. But in here, this big shot move here, you could have picked up in here, even though it was underneath the trendinator, could have bought a share or two, a few shares in here on Occidental. I haven't made any trade into this yet. And I don't care how much this stretches. And this is what drives everybody nuts. When they see that big white candle, it's, oh my gosh, I got to get in it. I got to hurry up and buy it. What they don't do is recognize that when you chase that stretch up without any rest or pullback, you can smack into that resistance up here and fall all the way back. Notice I alerted this up here. If that was going to rest and hold, I would have been in Occidental. Not in Occidental because I'm not going to predict the market. I'm not going to predict the chart. I'm going to make the chart come to me. So if I wait and wait for this to rest and set up the pattern, and I don't care if it's here, I don't care if it's all the way up here. Because I'm not here to just trade to be busy. I'm here to trade in trades that give me a better opportunity to win. A higher odds of win. It doesn't matter. I don't have to buy the bottoms to be successful in the market. I used to think, and wrongly so, I thought I have to be the guy who picks the tops and bottoms. Otherwise, there's no money to be made. And how many of you guys have ever kind of had that thought process and you miss the perfect bottom entry? You never get in the trade. And that trade goes up for months, just keeps going up, and you're not in it. Because doggone it, I missed the perfect entry, so I'm not going to get into that trade. To me, that's where I was, and I finally figured out years ago how backward thinking that is. If the institutions want to support a stock and start pushing it up, I don't care where it sets up, because the odds of me winning improve if I follow that simple continuation pattern to the upside. Okay, you guys know that I'm really big on the pullback opportunity trades. So stock moves up, pulls back, finds support, finds trend, looking for the entry. Now, here's the thing. I'm not predicting that it's going to bounce here. I literally set an alert and I make the trade prove to me that it's going to hold, and I'm going to see buyers step through there. Okay? I don't have to predict anything. I make the trade come to me. If it rallies and consolidates, it's one of my favorite, because usually you get a lower risk entry on a pop out of the box pattern. And you guys are going to find that probably 90+% of all my trades are going to be those two patterns in any time frame of chart. I do the exact same thing when I trade futures. Here's a very, very fast futures chart. And this is not to brag or anything like that. I just want to let everyone know I only trade, this is the Dow Jones E-mini futures on a 333 tick. This is the only chart I intraday trade, period, the only chart. Okay, last year I made over $150,000. Just trading the same patterns, the continuation patterns as they set up. I don't know if it's going to push on higher here, but that's just a continuation pattern. Here's a continuation short. Here's a continuation short. Here is a beautiful continuation short. And I can just repeat those patterns without having to do any hand-wringing or predicting of anything. Literally, it is easy as saying, hey, I like the way this setup is, set an alert, make the trade fall into that entry, and then run it down to take your profit. Or run it up to take your profit, whatever it is that you see in the chart. So it works on every time frame. And this is a very, very fast chart. Okay. Now, one thing that I'm going to back this up a little bit, this move down. This move down, as hard and fast as it was, I want you to see we're not getting giant candles in here. We're not even getting giant whipsaws back in any of this move down. Quality of trend is important. If you look at a chart, and I don't care what chart it is, and it doesn't make any sense to you because it's sloppy, then why waste your time? I mean, really, why waste your time? If you don't have a clean and concise price action chart, you've got this big sloppy mess. Usually the reason people are jumping into those is because, well, it's NVIDIA. I've got to trade NVIDIA. I have to trade it. I have to buy it. No, you don't. You don't have to do anything. Find a clean, concise chart, something easy to see, something easy to enter, something with a low risk entry into the trade. Just because NVIDIA is the flavor of the day doesn't necessarily mean that you have to be in it. The stocks that I have got alerted over here are stocks that aren't really the flavor of the day, right? I've got really nice profits in PSLV, silver. Okay, just doing the same thing. There's that continuation pattern in the chart, moving those to the upside. So when you're looking at these charts, and you saw Tiger was just exactly the same, there's the pattern. If you take a look at like Newmont that we picked up the other day in here, and just as an example trade, there's the pattern, there's the run. And by the way, I just want you to notice that's a 3A trap. Look for concise patterns. If it's volatile, if it's all over the place, I mean, think about this, guys. If if the price action is erratic and all over the place, I'll give you an example that failed on us, and that was Uber. We picked up a position in Uber right in here. And then it just went wonky in here for a while. It just jumped up and down like crazy in here for a while. It just went wonky. Okay? The volatility, when you have volatility in a trade, your odds of winning that trade are less. Okay? This showed nice, concise price action in here and then just went wonky. Okay? You're going to lose some trades. But there was no way I was going to try to re-enter this mess here, because it could have easily just whipped right straight back down to new lows in that chart. So when volatility comes into play, my odds of being right on the direction diminish. So I need to back away. I choose not to trade those because I want that simple setup, that simple entry into a trade. Okay, I mentioned FCX in the morning prep today. There is a continuation pattern attempting to set up. It tried to get something going today. The selling in the market kind of drew that back down. FCX is a nice potential setup. I mentioned GDX in the morning prep today. There's a continuation pattern setting up. It's popping and moving today, and you can see beautiful entry potential right in here in that trade, and they just continue as long as the trend holds. Okay. Now, I don't know about you guys, but for me, I don't have any ego on being able to predict the market anymore. I can't. I don't want to. I don't care about trading every day. What I care about is making money. And I do that by being more disciplined to my trading. So there's days where I don't make a single trade. I'm not interested in making a trade some of those days. Some days I'd like to, but nothing really gives me the setup that I really want, so I don't trade. But because of that, I hold a higher win-loss ratio. I don't trade as much, but I make more money because I'm willing to wait and I'm patient for good quality setups that give me great opportunities in the trades. Now today, this week I have been mentioning some of these. This got a news boost here today, but there's a lower high continuation short. CCL, we were talking about this week as a potential short. And here's the cool thing on these guys. You can actually see them setting up before they occur. Before the trade actually happens, you can identify the pattern. You can go check your options to see if you want to trade it with options, if the options are good, before you even place an alert on the trade. If there's even options on the position. You can look for those trades ahead of time, set them up, and then wait. See if they're going to come to you in the way you think. And these are good examples of trades that I have been telling people to keep an eye on, that they were setting up short, and they actually played out short today all at once, which might have made it hard to get into some of them. I'll admit there might not have been the easiest thing to get into, but something you want to be paying attention to. I mentioned VALE in the morning prep today. This is a trade where we had the nice little continuation pattern in here. And there it goes. So I don't know if you guys have any questions on this, but these continuation patterns, they can also have candlestick implications in them, like a mat hold candlestick pattern. You can have things like morning stars. In a bearish trade, you can have some evening stars. You can have some kickers that happen to show up within that pattern to really energize a move. This pattern right here, where we had that volatility come in right in here, we jump down and then push all the way back up. I call that a springboard. You know, it's like somebody jumping up and down on a springboard in a swimming pool, bends way down for a bit, and then it just pops right back up, and it throws that price higher. You guys know that the Fig Newton pattern is one that doesn't necessarily mean is a trade yet. It's something to watch for a potential entry into a trade. So those Fig Newtons, those Oreo cookie patterns that show up in charts that give you that continuation look for that specific trend. Now, if it's not near a trend, and if it's not near a support or not near a resistance, the odds of winning those trades diminish. So it all depends on how picky you want to be. If you wait for the chart to be reacting to support and trend, you're going to miss some trades. Okay, you're not going to be in everything moving. Okay, but if you're patient and wait for the good quality trade, you end up winning more trades. You may not trade as much, but you'll make more because you don't suffer the drawdowns by trying to be involved in everything moving in the market. Okay. Bob, it's a good question. Looking at the quality of the setup, quality of the trend, how steep is the trend? How much risk is there in that? What's the quality of the options in the trend? Do I have good open interest in those options, saying that I'm not the only one that sees this? Things like that will weed it out. Then the other thing, Bob, is set price alerts. Because we can all have a whole bunch of charts setting up that don't actually perform, right? That don't follow through. Don't predict the entry, make the entry come to you. And you'll weed out a lot of stocks that way. I showed you that in Occidental. I was looking for that entry in Occidental here. Set the alert, never happened. So I don't care. If the trade doesn't perform, I don't care. Because I'm not in it. It's not a big deal. But that's a real simple way. You're going to weed out charts just like that by setting alerts, because some are going to go, some aren't. Okay? I think Starbucks is setting up. We've talked about this today, a little pop out of the box pattern setting up here on Starbucks. But look where it is on the trend. It is possible it could go right here. Okay? It's possible. It could take off. You could set an alert there. Try to catch that entry into the trade. Okay? It's also possible, guys, that Starbucks won't go until it's all the way over here. I never know when it's going to go. Excuse me. I have to wait for it. I can tell you that anytime you get a major extension in a chart, you tend to get longer resting, consolidating periods in the market. So recognize the trend. Remember, your odds are not as good of winning a trade if you're away from trend. We do have the benefit of support here, but we're away from trend. It's possible this could go early. It's also possible, because we're away from trend, okay, you put an alert up here, it pops into your alert, you're in the trade, and then it still comes back to trend. So for a swing trader, that's a problem. unless you buy a long enough option position on that, you lose too much in that theta process and that waiting process and those extended conditions to come back. Okay, so for the swing trader that's really quick in and out, that can be a real problem if you're not willing to wait on that trade. So as great of a pop out of the box as this could be, I also have to recognize that that's quite an extension, and I shouldn't be surprised if this has to rest, consolidate, or even pull back. Okay, making the odds of winning that trade probably a little bit less, unless I have more of a long-term outlook on it. With Starbucks Weekly, I'm going to guess that Starbucks Weekly is also going to show me too much extension. Yeah, it's not there. It needs to rest. Again, it may have to rest for weeks for that to set up. Okay. Let me give you an example here. I'm going to go to the naked chart and go to AT&T here. Look in here. How many weeks did this go sideways? Weeks. Okay. So when you look longer term on the chart, you really have to be prepared for that potential of that longer hold. This is the kind of thing where maybe you start with just a few shares in here someplace, and then you wait for the better entry. You can see how this was pretty challenging here, but look how easy this was here. That's easy. Again, it's weeks in consolidation, but if you're already involved in the trade with a small position or whatever, just wait. Wait for the better entry, and then add to the trade. Okay? The more patient you are in trading, as long as you're using good support, resistance, and trend, technical analysis in the trade, and you're always working to get trades that fit you personally, meaning that the risk and reward in those trades fit you personally, you're going to make more money. You will not be as active in your trading, but you will make more money as a general rule, just simply because of that patience to look for only really good trades. Does that make sense? See, think about it, guys. If you're a 50-50 win-loss ratio trader, and you just say, well, I've got to be active, I've got to keep trading, I've got to trade more, but you're losing half of the trades, are you really making much progress in your account? If you would have cut that back to being really picky on the trades and only ended up with 3 or 4, and they won at a higher rate, you're making more money. And isn't that what we're here for? To make money, not just to be busy trading, not just to be, spending money and making the brokers rich. But we're here to make money. And so being particular about the trade, Ed used to say this all the time, and I just, it really is one of those great things to be paying attention to. And that is, Ed used to say, treat every stock trade as if you're the banker loaning money, because you're loaning money to that stock. Make sure every I is dotted, every T is crossed, everything has been ferreted out. And guess what? When you do that, you're going to win more trades. You may not be loaning money to everything out there just in a rush to put money at risk, but you'll make more money in the market. Okay? So when we look at these potential trades in these potential patterns, just be really picky. Be really picky. Look for those continuations. Philip Morris, for example, is a continuation pattern setting up. It's also a very, very steep upside trend. Okay, but you can see the pattern. There's the trend. It didn't even quite come to trend. It's trying to extend. Don't be too surprised. Pops up if this has to come back into trend or even come on back down a little bit. But those continuation patterns are pretty easy to find if you look for them. And they're all over the market. They're in every time frame. Every time frame in charts. Every single time frame in charts. I'm in a trade here in UNG. Been trading this for a long time. There's a good weekly entry there. Okay. I've been buying into this for a while and trading around this trade, using calls, using puts, using spreads, all that kind of stuff. Not here to talk about that so much, but just to give you an idea, it doesn't even have to be a great chart to make a lot of money on it. My current profit on UNG at this very second, looking at my account, is 541% on the combined trades around UNG. Okay, what I'm looking to do here in UNG is now wait for the next. I've got a short call up here. Just rolled short calls yesterday. Took a 97% profit on last month's short call, added some more short calls onto the trade. Now I'm letting this rest or pull back, and I'll be waiting for the next entry. This is kind of steep. I would not be at all surprised if this pulls back into here, if this has to rest in here for a while, but it's no problem because I've already got a good profit in. I'm hedged on the trade, and then I'm going to wait for the next entry into a position. Okay, you don't have to trade anything like that like I do, holding the long term. You can do this on any time frame. I've been looking at a chart like VG here. It's a new natural gas play out in the market, and you can see it's a brand new issue. There really isn't anything in here to go on that. So I was actually went the other day, and I was looking at the hourly in here and just looking to nibble something here on the hourly if it comes up. You can see right now I have no bullish pattern in here yet. So I'm not even going to nibble unless I have a bullish pattern. And then I'll wait. If I decide to get into this, then I'll wait for the next entry into the trade, and it'll likely be on the daily swing on something like this. Wait for the entry into that trade so that I can move along with it. I think natural gas has got a big future coming up under this administration, so I could be wrong, but that's what I'm thinking. SU is a nice little trap pattern if you're not in it already. Here's what I look at. Okay. Here's the trend. Okay. It's away from trend. Would you agree? It's away from trend. It's got all of this congestion in here. Could this rest a while more? Now, I don't know. Okay, but I look at this and I see the possibility that this could rest here for a while. Okay, so if I'm going to make the decision to trade this, I'm going to look at this price action up here. Can you guys see where the sellers are? The sellers are all right up here. That's where the sellers come in. Keep it down. So if I were going to make the decision to go into this early away from the trend, I'm going to make that trade come to me. Does that make sense, Keith? I want to see that they can break through that resistance of the sellers. And if I look at that trade and say, well, if my entry has to be here and my stop loss needs to be down here, maybe I don't want to take that much risk on this trade. Maybe I'll just wait on this because I'm far enough away from this trend. Who knows? It could just rest out into here and give me an even tighter entry somewhere out here if that doesn't trigger. Or I can just make the decision I'm going to wait. I'm pretty picky about my trades. Okay? But remember, the key elements, the best trades are going to be near support and they're going to be near trend. For longs, if they're short, they're going to be near resistance and they're going to be near trend. Okay? So I just look for those patterns. I'm kind of picky about those. I'm not saying that this can't go. I think it's a really good pattern. I think it's potentially a very good setup. It may also be early. And that's a real problem. You know, how many of you have been a little bit frustrated here lately in the market because we're not getting great follow through, and you buy an option for a swing trade and it just doesn't perform? You're just not getting performance out of it. A lot of times, guys, what you're going to find is you're chasing a move too soon. It's away from trend or it's away from support. And you're trying to swing something that may not be ready to be swung. And consequently, you're getting more losses on those trades. Okay? So patience to the pattern will help you an awful lot in cleaning that up and getting those better entry trades overall. Now, here again, I'm going to say this again because I think this gets tossed. We discount this stuff so much because we think if we're going to buy it, we got to go heavy into it. We got to get the full position right now. We've got to, because I got to make a lot of money. Right? Keith, can you buy one share of this and wait? Is that going to hurt you, buying one share and waiting? Keeping an eye on it. You're not going to miss it if it's in your portfolio. Hopefully, you're not going to miss it. You're going to look at it every day. And you're going to see that pattern develop as it develops and wait for the next entry into the trade. And here's the cool thing, Keith, and something I did on UNG. Okay, I think this is a really good chart. But the trend is out here. What if this pops, reverses, and then starts down? Well, if I have one share of this trade, I can buy puts here. Right? I can trade that one share all around it. So even if I buy that one share and it's just not, or 10 or whatever it is that you choose to do, doesn't prevent you from trading other trades around that position to make money on it. If it fails, it fails. Let's make money on it. Does that make sense? And just as a really quick last example here, Mike Peterson, quite a few years back, Mike, I'd done a class and we had our new app out and I don't know where it was in this chart. at this point. I really don't know where it was. But Mike had been into a trade on UAA, and it cost him quite a bit of money. And we talked about why, he was just, feeling the vibe and thinking this was going to go up because, hey, no one wants to sell Under Armour. It's a good stock. It's a good company. But he lost quite a bit of money on it. And so he bet me, he said, I'll tell you what, if you buy 10 shares of UAA and hold it till it doubles, I'll go buy a smartphone. I said, deal. I immediately bought 10 shares. Stock was moving down. Over the course of 2 years on those 10 shares, I made over $7,000. Because when it was time to put a short on it, I put a short on it. When it was time to put calls on it, I put calls on it. And I traded around those 10 shares and made $7,000. Okay? So don't be afraid of buying a small stock position and just waiting for the trade to see if it's going to perform, instead of going all in on a trade, on every trade, because we have this idea, I have to make a lot of money right now. And we end up losing a lot of money, or our account stays in purgatory for a long period of time because we're not willing to be patient for those trades to set up in the quality that we're looking for. Be stringent. Be that banker, crossing every T, dotting every I, making sure everything is right on that trade before you build a big position in the trade. Okay? And it will save you a lot of money, and you can make a lot of money doing that. So to finish up here, guys, on those continuation patterns, just write this down. I'm telling you guys, this one phrase changed things for me. And that is, I don't have to buy the bottom. I don't have to pick the bottom. I don't have to pick any tops. I have to find a trend and then wait for the next entry into the trend. Gene, no. If you have one share, does that prevent you from buying a call option? No. If you have one share, does it prevent you from buying a put option? Obviously no, right? If you have one share, does it prevent you from doing bear call credit spreads or bull put credit spreads? No. Can you still do debit spreads? Yes. Can you do calendars? Yes. Ratio spreads? Yes. That makes sense? I know I push on that a little bit because a lot of people are stuck thinking that you got to have a big position to make money. But no, I'm putting a marker in my brokerage account, so I'm paying attention to it. Okay. Just to give you an example right now, my Boeing position in here, which I'm in a profit on my Boeing trade. I own 5 shares. And I'm waiting for the next call opportunity to occur. And I'll buy calls. I've already got profit. And now I'm waiting for calls. If it fails and starts going short, I'll buy puts. Or do spreads or something like that around it. Okay? Stops are always based on price action, Rob. Stops for profit targets are always based on the next resistance or the next support level in the chart. 2/3 to 3/4 of trade, of an intraday trade, when it pushes up to the next resistance, take 2/3 to 3/4 of the trade off and then maybe try to scale the rest. If I only have a single contract or a 2 contract trade, pushes up to that next level of resistance or down to that next level of support, it's close. Take the profit. I don't care what happens after that. Take the profit. Okay, very disciplined on how I trade futures. Okay, I've got to go, guys. John will be on. Hope you got something out of this today. Hope this made some sense to you, and hopefully this gives you some hope too. It doesn't have to be as hard as we make it in trading if we just find a trend and wait for the next entry into the trade. Y'all take care. Have a great afternoon. Wish you all the best.